Hi, good morning, good day, and welcome. This is our global series, Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is quick and smart, so let's have a nice start like every day. And today it's Tuesday, 11th of December 2018. Welcome to Admiral Markets. We will start like every day with our disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk which is not suitable for all investors due to their complex nature. If you're a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find the long version there. If you are in the European Union and you'd like to read and find out more about the different offers and options for retail clients, professional clients, due to the ESMA regulation, what is the topic of the year in the EU, you can also find information on our web pages, or a picture shows more than 1,000 words. 2 prominent examples, the margin requirements could be quite different. DAX 30 or Euro dollar, like you see, retail client, professional client margin requirements. If you are a professional trader and you like to get the professional client status, you can apply for it online if you are eligible. Here's a specific link where you will find more about it. Retail clients still have a big benefit. It's called unlimited protection against negative balances. Professional clients don't get it via regulation, but some brokers and of course also Admiral Markets offer something additional. We call it negative balance protection policy. And here also professional clients get a protection up to 50,000 British pounds, what is around about 70,000 euro. More about that on our web pages like admiralmarkets.com. This is me. My name's Jens. My English made in Germany, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's day. On Tuesday, like today, it's Paul's day. On Wednesday, it's Giancarlo's day. On Thursday, it's Marcus' day. On Friday, it's DAX day. Our leading day traders live every business day, every trading day to the same time. And of course, if you like to trade Forex and CFDs, you will get many benefits only with us. DAX 30, typical spread of just 0.8 points. Euro dollar 0.6 pips typical spread without additional commission. Check it out on admiralmarkets.com. And if you'd like to see what we are doing globally, we have an office in Chile, we have an office in Australia, we have offices in the European Union. If you'd like to check out the different offers and options, it's your choice. Go online to our webpage and you'll find more about it. Enough from my side. Now it's time for Paul. Good morning, good day, Paul. What's your view to the markets today?
Good morning, Jens. Thank you for the introduction. Good morning, traders. I hope you're all well. I hope you can all hear my voice. I hope you can all see my screens there. Hopefully that's coming through to you now. Well, here we are, Tuesday, the 11th of December, and it's been a rather interesting 24 hours in what has been the last week, or let's say the last month, has been rather interesting in terms of those of us residing in the European Union. There's been plenty going on. So what I thought we'd have a little bit of a chat about today is, of course, that, we can't really avoid the the implications of the withdrawal agreement negotiations between the UK and the European Union, and more sort of pointedly the way that Theresa May, the UK Prime Minister, well, at this moment, how she is conducting herself. Okay, so I appreciate that most of your European traders might have a good grasp on that, but we're a global audience here today. So just a little bit of a quick sort of insight in that, what we saw yesterday was that today we were due to have the vote in Parliament regarding the backing of the withdrawal agreement, and it became pretty clear over the last week or so that there was just literally no enthusiasm for it whatsoever, and that Theresa May would invariably suffer a rather sort of painful, a rather calamitous defeat within that. And so, in the best interests of politicians, not wanting to lose, she pulled that yesterday. She pulled that vote and made a statement to the House of Parliament yesterday afternoon. As you can imagine, that probably had an impact on sterling, what we saw yesterday. And here we are on the Admiral Markets MT4 platform here, and I have a profile here on the British pound. And I have these set up for all of the major currencies that I like to trade, and we can see here, top left, pound against dollar, euro against sterling, pound against Canadian dollar, pound against Aussie dollar, pound against the yen, pound against the Swiss, pound against the Kiwi dollar, and also the FTSE here, okay, the main UK indices. So when I have a profile set up like this, I can very, very quickly get an indication of the sentiment within a particular currency. And realistically, what we saw yesterday was, another drastic sell-off in the sterling across the board. And I'm going to just focus a little bit on the pound against the dollar here. Okay, so just bring this chart up now. I appreciate that we have we have a broad range of experience of traders in the room. So for those of you who are new to trading, my charts are quite simple. Okay, I have green and red bearish and bullish candles. I have a blue 20 period simple moving average, a red 50 simple moving average, a green 200 simple moving average. I have fractals, and then I will also draw in particular levels or patterns of support and resistance or significance. So try and keep the charts relatively simple. There's no other real indicators on there. There's enough there for me to make a decision. As I said, this is the pound against the dollar. It's the weekly chart. Okay, so what I'm interested in there is, you can see that actually since early this year, we've been in a downtrend. We talked about the flag pattern there, a continuation pattern there, okay, that we were expected to break out. But what interested me yesterday was, here we have on the daily chart, here we had the selling, okay, and what actually happened is, we broke into sort of new lows for the year, okay, new lows for 2018, okay, where we traded down to just a smidge above 125, okay. We broke this kind of level around about 2660, and then we sort of fell down and away, and that kind of gives me an interest into into a possible trade setup, because what we've seen is Theresa May has the I think it's the EU summit, leaders summit, sort of Thursday and Friday of this week, and so now she is scurrying around Europe trying to get some amendments to her deal. She is apparently meeting Juncker this evening. Juncker's already come out this morning and said there will be no renegotiations or no changes. So, as always, it's there's a lot of toing and froing going on, and to be quite honest, she's made a complete hash of it, and of course that has an impact on the sterling. But what I'm looking at here, and we can already see it happening if I just go down into the shorter time frames. As I said, here's the 4 hour. We pushed all the way down, but you can see overnight this morning we've had a little bit of a bounce. Okay, whether that's a dead cat bounce, well, I think we're about to find out. We talked a little bit last week about a wedge forming. It broke and it fell away. But when I get down to the 1 hour chart, okay, what I'm looking at and what I'm interested in, traders, is something for you to sort of keep an eye on, is that I'd be interested to see how price, when it gets back up to that 126.60 area, okay, where we'll also have the 1 hour 50 period moving average will be around. What I'll be looking to do is to see how does price react here, okay? How does price, does support now become resistance? So I'll be basically waiting to sort of see price roll up to there. Well, and then actually I'll be looking for if there is any kind of bearish reversal patterns there. So maybe we get like a bearish pin bar, or a bearish key reversal, or engulfing candle, or a 3-bar reversal off the 50 period moving average. Well, then there I'd be looking to sort of take another small short. Okay. What I have been doing is I have been trading sterling, but what I've been doing is I've been minimizing my risk to about a quarter of what I would normally risk on a trade, simply because, of course, that things are, let's say, things are changing rapidly. The landscape is changing on an hour by hour basis, and so I want to be engaged with that. But also, what I want to do is to minimize my risk to about a quarter or a fifth of what I would normally put on in terms of my position size. So definitely keep an eye on that, ladies and gentlemen. Keep an eye on that 126.60 level. Can we see if will support turn into resistance? Will that roll over? Okay, there, and if so, that will be an opportunity for us to sort of take a short. The same is, if I just look at euro sterling, it's not something I've covered a great deal recently, mainly because there's not been that much going on there. Earlier on in the year, I talked about how we were just literally bouncing between around about the 87.50 and the 90 level, okay, in fact, pretty much for about the last 15 months, and you can see that happened. And last time we got up to 90, okay, we put in a nice momentum reversal candle there, okay, and we drifted back down to the sort of 87, 86 area. Then we put in a key reversal there, and once again we've pushed up, okay, back up to that 90 area, and that's where we sort of clattered through, okay, yesterday. But here's what I'm looking to see. Will it actually stay up there around about 90? Does it actually suit the EU, okay, the ECB, to have euro that strong against the sterling? I personally don't think it. I don't think it does, and I think what might happen is that we might actually see a little bit of, once again, a push back down towards the sort of the 87 area as the two, let's say, as the two currencies, the euro and the sterling, they kind of jostle. All right, they're jostling for position, and no one wants to be particularly strong at the moment between them, because actually it suits both of them, to be a weaker currency, because they think that will help them in terms of their exports to each other, but also to the world in a more global scale. So once again, just have a look, see how price reacts down at this 90 area. Okay, have a look. Will there be a little bit of a bounce up off there, or will we actually see a kind of more of a position of a fall through? That's another area for you to keep an eye on this afternoon. Okay, and I think really euro sterling for the rest of the week, with sort of Theresa May's behaviour, and also the leader of the EU leaders summit. Well, then that will actually have an impact upon which we want to we want to keep a particular eye on. So as I said, we had to have a little bit of a chat about sterling, because it is, of course, it's been so interesting, been so fascinating going on, and we'll now have a little look at some other interesting opportunities and markets. Okay, I appreciate that we have a lot of Admiral Markets customers. They like euro dollar, they like DAX. I'll make sure we have a quick look at those alongside with a few of the other things that we've looked at over the last week or two. I just want to have a quick chat about gold, okay, because we talked quite a bit about that in our last session. Here's the weekly chart. Remember, if you remember joining us last week, I was talking about that 1234, 1235 zone had broken, and we can see on the weekly chart here, not only did it break, but it held above it, okay, which is always it's always interesting, it's always significant to me when we get a weekly close and hold above. If we go down to the daily chart, and in fact actually maybe we'll go down to the 4-hourly chart, that might be a little bit better for us. What I talked about last week was when we actually saw the last week when we were sort of talking, I saw that price had broken that area, okay, broken that 1234, 1235 level. What I said was that, if you remember, I wanted to see price drift down, retest that level, a little bit like what I'm looking for in the sort of pound against dollar and the euro sterling, which we've talked about. I want to see price drift down and retest it, okay, and see how it reacted there before it moved upwards, and that would give me an indication of some continued gold strength. And actually, that's what we had. We had very nicely. We drifted back down, and actually, what happened is we formed a nice 3-bar reversal, okay, here off that level. Resistance became support. If you don't know what a 3-bar reversal is, then it's covered in my Monday afternoon Mastering the 4 M's of Trading webinars. You'll find there's a specific one in the Admiral Markets YouTube channel there. You'll be able to go through the sort of the Mastering the 4 M's webinar, but also there's one in particular that explains what that 3-bar reversal is. We can see it, it performed a very nice 3-bar reversal there before moving up, and then yesterday it did exactly the same, a nice 3-bar reversal, and we've continued to drift up. What I also said just on the daily chart was, that sort of price action also gave us a breakout, followed by a nice inside bar, which was also a pin bar. And, I talked about that on the Mastering Friends, that in itself, if you'd like to trade breakouts, that's a nice way to use inside bars. And I would like to see us sort of drift our way north to around about that daily 200, which is around about that 1255. Okay, that's what I'll be looking. If you are still long, okay, that would be my sort of first target. We can also see that there was some action here, okay, on there in terms of the price action. So I'm drifting north to about 1255, and then I would take a look at what price does there. Okay, does price actually reverse? Does price slice through, or does price take a little bit of a plateau? Does it actually just consolidate for a while? But that would be my target move on that. So, always have a very, very quick look at a dollar index, because it's, for FX traders, it's the big one. This is the daily chart of the dollar index. Last week we were talking about, we were breaking that trend line. Okay, we were breaking that trend line, and I said I wanted to see it hold beneath it, a little bit like the the gold move. But actually, we broke it, but we haven't. And in fact, actually, the last week has been rather scrappy for the dollar. Okay, we can see that it's just been knocking back and forth around about between 96.33 and 97.30. Yesterday we printed what is a bullish key reversal. It's a bullish engulfing candle. But the thing about this, ladies and gentlemen, is for me is that I like to see a bullish engulfing, a bullish key reversal at the end of a downtrend. That's where I like to see it. when I see it after a period of congestion, and I don't give it as much validation, okay, all right? I don't give it as much validation. I think we're in a little bit of a scrappy zone there at the moment, okay? 97 seems to be holding there. And what I need to see is to see some more clearer price action. Maybe we'll get that on as the week goes on. At the moment, I don't see real very clear price action on that for me. It's still bullish, but there's nothing really to excite me. So I want to have a look at, well, how's that impacting the euro? We just had a little look at how euro is against the sterling, but how is it going against the dollar? If I start on the weekly chart here, okay, and that always is I love weekly charts. I talk about them all the time. And what I have here, okay, what I'm interested in is we can see we've had a nice downtrend, but what I'm noticing here is on the weekly chart, this 113 level, which is also where the weekly 200 period moving average has been acting as pretty strong support. We can see price has broken through it, but on a weekly basis, it's not actually been able to close, all right? And what I'm interested in is I'm starting to think, could that be a false breakout there? Is this a case of, we've got a lot of support there, and we've got to just take a look and see, what turns it up. And if I go down to our daily chart, well, I'm looking at that as, there's a little bit of a wedge building there, okay? Once again, that 113 level is holding. Yesterday, yeah, we had a bearish engulfing, okay? We had a bearish key reversal, okay? But I'd be looking at, well, at the moment 113 still looks as pretty strong support, okay? I'd be looking at, even if I was shorting the break of that, there's not really enough distance before I run into what has clearly been a strong level of support. I don't want to sell into support. In the same way, I don't want to buy into resistance. So, once again, I think this is it's coiling up, okay? There's a wedge forming there, and I'm just going to be waiting to see what will happen. And of course, part of that is going to be driven by what comes out of the EU Leaders Summit, okay? If there is an announcement about Brexit, there is, everything is hunky-dory, well then, everyone will be happy and things will move on. We'll see some euro strength. But at the moment, I think that's just waiting to take its next move. So let's see, we've got a couple of minutes left, so let's have a little look at the DAX. I know, DAX is a very popular trading instrument for Admiral Markets clients. Great spreads, okay, on DAX, very, very tight, very competitive during open market hours. Here we have the weekly chart. Okay, we can see, last week was a pretty strong sell-off week, okay, for DAX, okay. DAX got hammered, and I'm going to look at that in a little bit more depth as we go down through the timeframes. But what I'm noticing is, if you remember when I was talking about, we were getting shorts, I was looking at that sort of 10,800 level, because what I was looking at is, I see this as a bit of a block there. There's a block of congestion there, and last week we broke into that, okay? We broke into, we broke to new annual lows, okay? And that's actually also, that you can look at that as almost like, almost sort of, lows for 2017 and 2018, okay? Breaking into those lows, looking at how that reacts. I was reading, I think I mentioned the other week, I was reading that, in terms of European markets, the DAX has been one of, if not the worst performing indices this year. If you're an investor, that's terrible news. If you're a trader, well, that's great, because actually it's provided us with some lovely trades, hasn't it, over the last few months and over the last few months and weeks. If I look here on the daily chart, if you remember what I talked about last week, I was talking about, was there a possible double bottom forming here? If you remember, we gapped up on the Monday, and actually what I wanted to do is, I wanted to sell into to closing the gap on an intraday basis, but I wanted to see how was the price action going to form. Were we going to actually get, a support, effectively a higher low, which might give us an indication that we'd drift north? Well, you can see quite clearly that, price action leads the way. That wasn't happening. And if, if we go down to the 4-hour chart, that little blue block is what we drew last week, okay? Because if I go down to the sort of hourly chart, we were looking here, I was talking about, actually we wanted to be short around here. I actually missed my own entry there that last week there, and because of the shenanigans that were going on with sterling last Tuesday morning. But I was saying we wanted to be a seller on a short-term basis, and wait to see if there was a on a longer term whether we would get a move north. But we didn't. We can just see that price has just rolled its way down. What I look at is yesterday, I look at that as being, we had a little bit of a gap down. We had a little bit of a double bottom with a false breakout. That's what I look at the moment. And then what I'm seeing this morning is that, the 20 period moving average is acting as a bit of dynamic. dynamic support there. We've just this morning, just in the last few minutes, broken above that day at the 1 hour 50 period moving average. So what I'd be looking for here is a case of, could price drift back down to around about 10,740, 10,735, okay? Then if I get bullish signals there, if I get bullish reversal, I'd be looking to be a buyer there, okay? It stops beneath the lows of the day around about 10,675, and then targeting back up towards that level of around about 10,835. That would be my first level, and that's where I'd actually be looking to move to on a shorter term basis. So there you go, Jens. That's taken us time. If there's time for a question or two, I'll happily take it. Otherwise, I will wish all of you traders the very best of success for your trading week.
Let's take a look to commodities, silver and gold, and maybe in correlation to it. That's a wish from one participant. Silver and gold.
Okay. Yeah, sure. So we've just we've had a good chat there about gold. Let's have a little look at silver. Let's bring up a silver chart here. Okay, excuse me. So here we have the silver on the day. Let's if we want to have a little look at the here we go. We'll have a little look at silver versus gold. Okay, let's have a look. I'm just going to bring this up like here. Just bear with me a moment, ladies and gentlemen. We'll just try and put this in so we can have a little bit of a look at it on a daily basis. So here we go. There's this. There we go. So here we go on the silver at the top, gold on the bottom. Okay. Well, what I'll be looking at is, let's get the cursors on here. We can see silver has been, for me, I look at silver there as, that is still in a little bit of a block there. Okay. And if I draw in some levels, okay, so I'm identifying some support resistance. So around about 1490 on the top side, okay, and then around about 1390 on the bottom side. I look at silver there, for the last, for the last effectively, three and getting towards 3.5 months, we have really been in what you might call like a dollar range between about 1390 and 1490, and that's what we're having. Whereas gold, okay, gold was in that range, but we can see actually gold has broken to the upside. We've actually had, we've had higher lows along the way there. We can see there on the bottom chart, we had a little bit of a coil up and we've broken to the north side. Question is, could we see that on silver? Well, at the moment, I don't personally see it. I would see is that, it needs to get above, break 1490, hold above it, okay, for me to be convinced that, let's say the bulls are in control. If the bulls were in control, then I'll be looking for price to sort of drift up towards that sort of daily 200 around about the 1540, okay. So there's a kind of a 50-cent piece there, okay, which is not a great deal on a daily basis in terms of reward to risk. But at the moment, I'd be looking at that and saying I'd need to see it break above and hold above that to convince me that we could actually have the sort of the same movement in silver as we've had in gold. Okay, perhaps gold is leading silver at the moment. That you'll find that there are periods where there is a great deal of confluence between them. Gold is on the up, but I would need to see silver break above that to convince me to be long silver with moving up towards that 1550 level on the where the daily 200 period is. I hope that helps, Jens. I hope that gives our traders a little bit of insight in being able to look at both silver and gold on the daily charts together.
Great. Thanks for today. Tomorrow is another day. We have 5 days a week, 5 different traders. So if you like real-time daily trading ideas, just join us tomorrow. Again, if you'd like to see and watch that again in a couple of hours, it will be available on our YouTube channel. Just go to youtube.com/Admiral Markets FX. Thanks to Paul. All the best. Hope you are keeping in the European Union. Every day news in the news. So let's see. Thrilling times in the markets. That's why the big volatility was yesterday. Greetings from Berlin office. Bye-bye.